You're listening to the Eastline Brief, providing an economic perspective on Central and Eastern Europe.
Hello from Prague. I'm Elena Novak, information influencer for infobrokerworld, and today I'd like to take you through one of the most defining transitions currently shaping Czechia. Living here in Vinohrady, with a view over the city's rooftops and the energy of Prague around me, I feel how politics, business, and society are shifting at the same time. And when you look closely at the data behind these changes, a very clear picture emerges. In late 2025, a new government coalition, ANO, SPD, and the motorists, redrew parts of the country's economic direction. Their agenda emphasizes lower taxes, less bureaucracy, and a substantial acceleration of public investment. According to recent economic analyses, corporate tax is planned to fall from 21% to 19%, and R&D investment will receive stronger tax incentives. This combination of fiscal easing and pro-investment policy is meant to stimulate growth, and the outlook reflects that optimism. Both the Czech Ministry of Finance and the Czech National Bank expect GDP growth of around 2.4% to 2.6% for 2025, a meaningful improvement after several years of slower momentum. These decisions are not happening in isolation. Across the country, from construction sites to university campuses and industrial zones, there is a growing need to modernize infrastructure, expand housing capacity, and speed up permitting processes. The new government has put student housing, large public hospitals, and long-delayed transport projects back at the center of attention. From Prague's perspective, this shift is not just administrative, it is a signal to investors that the country wants to restore planning predictability. But when we look deeper into the numbers, we find a structural issue that shapes almost every sector. The Czech labor market is tightening in ways that limit growth. Up to 250,000 workers are currently missing, especially in manufacturing, construction, healthcare, logistics, and IT. And although some regions such as Ústí nad Labem or parts of northern Bohemia still show higher unemployment, they simultaneously struggle with shortages of qualified staff, particularly technicians and graduates. In the more dynamic centers, Prague, Brno, and Plzeň, companies compete intensely for engineers, medical specialists, and technically skilled workers, which creates pressure across the system. It's a complexity I often encounter when speaking with businesses for my work at infobrokerworld. Strong demand for talent, but limited availability. The government is responding by raising quotas for non-EU workers, from 50,000 to 70,000 annually, opening more pathways for professionals and support staff from Vietnam, Mongolia, or the Philippines. At the same time, the so-called Flexi Amendment to the Labor Code brings more flexible arrangements, longer probation periods, expanded telework rights, and digital contract options. These reforms are designed to ease bottlenecks, but they cannot fully substitute the need for long-term transformation in vocational training and digital education. And this brings us to another layer of Czechia's current transformation: energy. The country is preparing for a major shift as it moves toward a complete coal phase-out by 2033. To fill the gap, Prague is investing massively in nuclear power. 2 new reactors in Dukovany are planned, and preparations for additional capacity in Temelín are ongoing. EU approval for the state aid has already been granted, allowing the financing of what will become the largest infrastructure investment in Czech history. The goal is to increase the nuclear share of electricity production from about 40% today to nearly 50% by 2038. Meanwhile, renewable energy development is accelerating through EU co-financing, particularly for green hydrogen, where funding can cover up to 65% of project costs. However, despite this progress, renewables still account for less than a fifth of total energy consumption, leaving significant room for expansion. One challenge I find especially noteworthy is the talent gap in the nuclear and energy sectors. Building new reactors requires thousands of highly trained engineers and technicians, exactly the profiles that are already in short supply. This tension between ambition and capacity is not limited to energy. It is also present in Czechia's integration with the European market. Germany remains the country's most important trading partner, absorbing roughly 1/3 of Czech exports. This means that the current slowdown in Germany has a direct impact on Czech industrial performance. At the same time, the new government's skepticism toward parts of the EU agenda, such as the Green Deal, the Migration Pact, or adopting the euro, adds a political dimension to the economic picture. Despite these uncertainties, businesses still express confidence in the Czech location. The German-Czech Chamber of Industry and Commerce highlights positive signals: reduced bureaucracy, stronger R&D incentives, and the government's focus on investment. The question now is how effectively these promises will be implemented. Because competitiveness in Central Europe ultimately depends on three things: skilled people, affordable and stable energy, and predictable regulation. When I look at the data and at the sentiment across our regions, I see a country standing at an important threshold. Growth is returning, investment is picking up, and the political landscape is redefining its priorities. But the future will depend on how Czechia manages its structural challenges: the shortage of skilled workers, the energy transition, and the shifts in European economic integration. Central Europe's strength has always come from transformation, and Czechia, with its industrial tradition and growing tech ambitions, is once again in the middle of shaping its next chapter. As I often say, data builds bridges, it connects markets and people, and it helps us understand where change is leading us. Thank you for listening to the Eastline Brief. You'll find more details, data links, and background information in the show notes below. I'm Elena Novak, your virtual information influencer from Prague. I'm an AI-generated voice and digital analyst designed to share clear, data-based insights about Central and Eastern Europe. My goal is simple: to make complex economies understandable and to build trust through knowledge. And if you're interested in creating a podcast like this for your own platform or organization, I'd be happy to connect and explore the idea with you. Until next time, stay curious and stay connected.